Okay, hello everybody. Welcome to Korean Atlanta Mentorship. So in this video, I'm going to give you some real talk. And this is so that you're emotionally prepared for when financial freedom happens. Because what happens to a lot of people is that when they make a lot of money, they actually become depressed because it's not what they thought they would be. It's not what they thought that it would be, right? Like they literally thought people would get better. They literally thought their life would get better. And all that happened is that now they just have a lot more money than everybody else, and everybody else is staying the same, right? So, and I tell you this as a person who's paid off my mortgage in the 3 years, right? And this is why, because it's not what I expected it to be, although I was like mentally prepared before, I was just always curious, right? Like I was like, yeah, I'm gonna pay off my mortgage under 3 years or whatever, and then I'll tell everybody and we'll see how they react. And I would love for them to be inspired, but because I just from my life experience, I know that most people just don't do anything. It's so here's the thing, okay? You can pay off your debt quickly with velocity banking. And yes, you should always evangelize, right? There's a reason why I use the term evangelism because a lot of people just ain't listening. So you got to preach over and over again, right? That's what you got to do. And sometimes I have to call upon strength from outside sources to make these videos over and over and over and over again because I'm going to be honest with you, being financially free is the exact opposite of what most people are. And so therefore, because most people are in debt and are struggling and you're financially free, you're therefore going to be lonely. Isn't that screwed up? But that's essentially the truth. And that's why, after I paid off my mortgage in 3 years and I told like random people, they kind of look at me with the blank stare and it's like, you heard me. I know you heard me, right? In fact, I asked GPT this several times. Why is it when I tell other people that I paid off my mortgage in 2 years and 9 months, they stare at me and act like they didn't hear me when I know they heard me.
When you tell people you paid off your mortgage in such a short time, their reaction might stem from a mix of disbelief, envy, or cognitive dissonance. Here's why they might act as though they didn't hear you. 1. Shock or disbelief. Paying off a mortgage in under 3 years is an extraordinary feat, and many people might find it hard to process. It challenges their understanding of what's possible, especially if they're still struggling with their own debts. 2. Intimidation or insecurity. Some people may feel insecure or even inadequate when they hear about someone else's financial success, especially if they feel stuck in their own financial situation. Ignoring your accomplishment could be a defense mechanism. 3. Lack of understanding. If they're unfamiliar with concepts like velocity banking or other strategies you used, they might not grasp how you achieved it. Their response could reflect confusion or an inability to relate. 4. Social conditioning. Many people are conditioned to believe that mortgages take decades to pay off. Your accomplishment might clash with what they've always accepted as normal, making it difficult for them to respond appropriately. 5. Assumption of exaggeration. They might assume you're exaggerating or leaving out crucial details, which leads them to dismiss the claim altogether. It's not about you. It's about their perception of what's possible. Often, people don't know how to respond to something so far outside their expectations. If you feel comfortable, you could offer to explain your approach and inspire them to think differently about their own finances.
And that's what we're going to do today. Again, inspire people to think differently about finances. And that's why we have this so-called, well, I don't want to say so-called because that makes it seem bad, this velocity banking club, right? So I want you to join the club, be part of the group of people who are debt free, and the way that we understand how to be debt free is just practicing these spreadsheets over and over again and not listening to nonsense like save $1,000. Okay, so we don't need to do that. Let me go ahead and delete this. All right, so what's velocity banking? All it is a debt payoff strategy using a line of credit as your main operating account. So let me go ahead and show you all what you got to do. It's only two things. Number one is a budget, and number two is having a line of credit as your main operating account. And as you can see here, I have income, I got expenses, I got leftover savings, and then we have our expenses. So we have 6 credit cards, 2 auto loans, a student loan, a mortgage, right? And we got our general expenses, which is our food, gas, insurance, and all our other stuff that we got to pay for after every single month. And what our goal is to pay off all this debt so that eventually this savings goes to zero. Okay? That's what we're going to do. So let's go ahead and do this. So we're going to copy the income. We're going to copy the expenses. Okay? So let's go ahead and do that. Copy the expenses. And this is really important where we understand that we're going to apply all of our income into debt, which is the line of credit, and we're going to have something called cash flow. So income minus expenses. That's what this is, and you might be like, this savings number and this cash flow number are exactly the same. Yes, until we complete the final step of velocity banking, which is moving some of our debts into that line of credit. Okay, so we're going to assume that we have access to $250,000 home equity line of credit. So it's kind of like a $250,000 credit card. Do we even need $250,000? Let me just check. How much of credit card debt is this? This is going to be 5 plus 8 plus 15 plus 27 plus 30 plus 7. So it's $92,000 of debt. Okay, 92K of debt that we're of credit card debt that we have. And so we don't need a $250,000 home equity line of credit, but maybe $100,000. Okay, $100,000. So what the banks will do is that if you offer your home equity, which is just the purchase price of your home or the value of your home minus any debts tied to it, um, they'll offer 80% of that in the form of a credit card like device called a home equity line of credit. And so we're going to assume we have $100,000 available in a home equity line of credit. Now let's go ahead and do this. What we're going to do is move these 6 credit cards into that line of credit, and that's going to be 92,000. And guess what happens when you move that 92,000 in that home equity line of credit? Well, these all go to zero. Oh my goodness. So how do we go from $884 to $4,000? That is insane. And so the last step is paycheck. You put your entire paycheck, this $8,000, into the line of credit, and then you take out your expenses, and then after every single month, the expense is going to go down about, I'm sorry, the debt in your line of credit is going to go down about $4,000, and I'll show you how the math works. Very simple. I do this in every single video, and there's going to be a point where I make 10,000 videos of these because I'm just following what Bruce Lee says, that you just do whatever you're doing 10,000 times and you're good. You're the master. People will fear you. All right, so now what we're doing is going to take the average daily balance, right? That's going to be the interest rate. No, the interest divided by 12. So interest rate is 8%. And then you divide by 12 to get the monthly interest, right? So we got to pay $600 a month to use this line of credit. But no worries, no biggies. Okay, so we're applying all of our money into debt, and then paycheck in, expenses out, paycheck in, expenses out. And then you see in a little bit over 2 years, wow, that was quick, we paid off $92,000. Whoa. Whoa, that's amazing. So in 26 months, 92K paid off. Whoever came up with this stuff is a genius. Now, I didn't come up with velocity banking. I heard it started in Australia, kind of got popular in Hawaii, and then it was brought over to Utah and then spread to the rest of the nation. That's what I heard. All right, so next thing we got to do is pay off these loans. So why do we pay off the loans later? Because we want to deal with the high interest rate credit cards first. And just as a cheat code, what loans do you tackle or move into the line of credit? Usually those short-term buy now, pay later loans, and ironically, those are 30% loans as well. I've actually seen paperwork where people thought like, I'm getting a buy now, pay later loan. And it's like a 30% loan for 1.5 years. It's insane. Okay, so 6 credit cards, 2 auto loans, a student loan, and a mortgage. Um, Okay, so let me think about this. All right, so we start off with the high interest rate and short-term loans, and then now we're going to deal with this. And luckily, we have a loan calculator. Okay, a loan calculator to help us figure out which loans to tackle. And let's go ahead and do that. So all I got to do is just paste this and then put in the details, 6%, and then this is 22,000 at 6.3 at 5 years, and then 33,000 at 6.1 at 10 years, and then let's just do this, 22,000 at 3%, and then how many years? It is 30 years. It's a 30-year mortgage. It's insane how mortgages back in the day were never 30 years. I think they were like 10 years, and they were only for like rich people. And they kind of worked into like a balloon, I think a balloon payment like structure, if I recall correctly. But yeah. So what we do is with this cool loan calculator is we just put in the current month. And what's the current month? What 26 months. So I put in 26, 26, 26, 26, right? So 26 months. I take these 2 loans, these 2 auto loans, and I put them in the line of credit. Why do I do that? Is because I get an extreme amount of cash flow from moving these 2 loans in based on what we call the cash flow index. And let me go ahead and do this. So it's G2 plus G3. So that's about 25 grand. And I'm going to move 25 grand into the line of credit. So let's go ahead and do that. So just do this plus 25369.62. And then what I'm going to do is I'm going to do 0, 0. Whoa, that's so easy. $4,704 of cash flow. That was so easy. Oh, wow. We really increased that sucker. All right, so we got that. And then now what we do is we just do this right here. So 4704.44. And then we just copy and paste this, and wow, that was easy, easy, easy. And 31 months, it's all paid off. So 31 months, we paid off 2 cars. So 5 months, 2 cars, that's impressive, isn't it? Or am I the only one who's impressed? 20 plus 22, 134K. 134K. All right. Okay, so now we tackle on the student loan and the mortgage. So the student loan is we're at month 31. Okay, so 31, 31. All right, so see how that these barely went down, right? So this is now 0, 0. And look at this, for a car loan, we only paid about 2 grand. Isn't that crazy? Not that much interest in a car loan compared to a mortgage, right? Even though this is a 3% mortgage, it's a 3% of a huge amount versus a 6% of a little amount, right? A lot of people don't think about that, but we're going to go ahead and eliminate this student loan debt. Now, what do we a lot of people on the internet like try to teach philosophy banking that you should always replace everything with a line of credit, and that's simply not true, right? We want to put things in a line of credit that give us a lot of cash flow, and the lower the cash flow index, the more cash flow that we get usually. And this one, not so much cash flow, but it's a relatively low balance, so we'll go for it. But when we pay off the mortgage, you kind of understand why you don't want to move things into the line of credit. But to control V, we're going to do this. We're going to do this. 26293.89. Okay, and then, all right, and then this is going to be 0, and then this is going to be $5,000 of cash flow. How do you all feel being part of this club? This financially free club? Man, this is so exciting. I am so excited. I'm kind of like Jesse Spano. You know, I actually watched the movie that ruined her career recently. I was like, man, this is so funny. This is a funny movie. I won't say the name of the movie, but remember that movie that ruined Elizabeth Berkley's career? Oh man. Oh, how long? How fast did we pay off the student loan? 1, 2, 3, 4, 5, 6. Unbelievable! 6 months to pay off the student loan. Woo! Okay. All right. So now this is 37 months, completely paid off, and we are good. So 37 months, and that would be 167K. All right, so now just tack on the mortgage, right? So mortgage is the least important debt because it takes up the least amount of cash flow compared to the amount that we borrowed, right? And so now we have $5,000 of cash flow. Let's look at 37 months, right? 37 months, what the balance is. And let's just kind of do a quick comparison. Quick comparison, okay? In 37 months, how much of the balance did we actually pay off? We paid off about 15K of the principal in 37 months. So if you don't know where let's see, 37 months. Let me rewrite this. 37 months, 15K in principal, right? So where did I get this? It's basically this balance minus the current balance, the original balance minus the current, and then you get 15,000 in principal. Okay, you see how easy that is, right? And so if you go, where are we? Where are we? Right here. What I want to show you is if you just move some of that into the line of credit, it's so easy to pay off, right? So plus 15000, 15,000. And how long does it take for us to pay off? 4 months. 1, 2, 3, 4. Whoa, is it 3 months or 4 months? 1, 2, 3 months. 3 months to pay it off. Oh my goodness. That's almost as good as paying off a mortgage in 2 years and 9 months. All right, or maybe not. I don't know. So 3 months. Okay, so 3 months. We paid off 50K in principal. Now we're still making the monthly payment, so that's why calculating the payoff time is a little bit hard. But luckily, we have our Velocity Banking calculator for this. So give me one moment to open it up. All right, here we go. We got the Velocity Banking calculator provided by Renata's Quick Plug. If you're interested in learning not only about Velocity Banking but financial literacy and real estate investing, click the Google form link below because I actually study this stuff, and this is where I learned velocity banking from. And if you want to learn with me, click the Google form link below. Okay, so quick plug for that, and this is their calculator. But yeah, I just plug it in, and they just tell me this is where I learned velocity banking from Renatus. So yeah, 3 years. Wow, that's almost as good. It's almost as good as paying off a mortgage in 2 years and 9 months. But it's not. It's not to my level. It's not the 1% like ChatGPT says that I am. So yeah, okay. So yeah, that's it. I mean, look how easy it is. So for those of you who are watching this, you're part of a special club. Just know that you're part of the Velocity Baking Club. Whatever day it is, I'll feel like one day I'll say it's a cult, another day I'll say it's a cool club, cool kids club. It's all good as long as we're debt free. Just need people to hang out with and chill with, right? I probably need to do one of those like chill and relax streams that is kind of popular on Twitch, although I admit that I haven't been on Twitch for a very long time just because I don't want to see hot tub streams, although they probably make an insane amount of money. Okay, so now this is zero. Okay, and when was it paid off? When was it paid off? In 3 years. So now what we do is 37 divide by, no, it's just actually 37 plus 36, right? What's that? 73. 73 divided by 12. 6.8 years. Ooh, debt free. 6.8 years. Oh, what am I even doing? Okay, all right. Well, so, yep, I'll just say this, right? I'll listen with this. Anybody who's watching this video until the end, you're part of the Velocity Banking Club, right? It's free membership. You just watch the videos, and now you're a club member. You just do your spreadsheets, and then you'll be like a club officer, And then, once you start making your YouTube channel and all these YouTube videos and social media, that's when you're going to be a cult leader. I mean, Velocity Banking cult. No, I mean, club officer. Officer. Did I say that? I keep saying cult leader. I don't know why that keeps coming out of my mouth. All right. Well, that's it for today, folks. Have a great day. Another beautiful Velocity Banking review, and we will all speak next time. Have a great night. This is Karina Lanta Mentorship.